Right, since the last cuddle, so much has happened that you just couldn't fit it all on one page. So I just wrote down the things that excited me. Doge, the Department of Governmental Efficiency, and I'm absolutely flabbergasted at how many people are not happy with Doge. Like, they are finding trillions of waste, fraud, abuse, kickbacks, and it's just nuts. Every country needs a Doge, the UK especially, and yeah, like every day they are, like, if you haven't gone to the official Doge website, they are literally taking screenshots of everything that they find. So anyone that says, oh, they're just finding, rubbish or all that, there's screenshots. So that's good. So, and Elon wants to eradicate $2 trillion worth of spending over the next 18 months. So I think they're going to do it. The US is in the process of setting up a sovereign wealth fund. Again, that seems to have gone under the radar a little bit, but that's huge. There's no reason why big countries shouldn't have a sovereign wealth fund. And to have a sovereign wealth fund, you need a country that somewhat balances its books. I mean, Britain used to be the biggest empire the world has ever seen. Bigger than the Romans, bigger than the Byzantines, yet what do we have now? Bugger all. We are the highest per capita of accountants on the planet. So the British Empire has condensed itself into basically accountants and offshore banking, basically. We are the kings of offshore banking. It's a bit like how the Romans condensed and compressed itself into the Vatican. That's basically what it is. And as I mentioned in a couple of cuddles ago, it'll be interesting to see when the US eventually compresses, a bit like what are they going to turn into? It could just turn into one massive hedge fund, like BlackRock is, but that's typically what happens to empires. But yeah, so having a sovereign wealth fund is great. And again, the UK needs a sovereign wealth fund as well, but we need to balance the books first. Deepseek, again, all of this stuff we've gone through during the trading pubs, but they've rattled the cage because at the moment there seems to be a bit of a compute bottleneck. You can't get near the big boys like OpenAI or Gemini without having huge data centers worth of compute. Deepseek came along and did a few little tweaks or algorithmic tweaks really, and went about things a bit different. Now, they were lying through their teeth when they said it was about $6.5 million training costs. That was the final training run. And it's now we've had more evidence now that they have roughly 50,000 H100 GPUs. So really, it's cost them about 200 million, but it's still a big saving compared to the billions that OpenAI have spent with ChatGPT. So that's good. It's making people these labs a lot more efficient. Sorry, Aaron, you have to introduce yourself now. Anyone late has to say who they are.
Why are they late?
And why are you late?
Are you serious?
This is Aaron. Grab a seat, mate. Are you serious? Was like, cue to move on. Detail. Who has not seen the trading pub from Thursday? Honestly, yeah, cool. Okay. It is worth watching just to catch up because it is a royal cluster mess of just stuff. I've spent the last couple of months just diving into detail, and I still probably only know, 10% of it. Like the more you learn about it, the more you realize you don't know shit. However, there are ways to compensate for our lack of coding knowledge. So yeah, we'll get there. And Grok 3 and Colossus, oh my lord. So Grok 3 is out at the moment. You can play with it right now. Use the web browser version. The one via the Twitter app I find is less good. So just go to grok.com or grok. whatever it's called. And the UI looks like ChatGPT, but it is very good. I've been giving it some very hard questions. So I test all AIs or LLMs with the same bunch of the questions. And so far, Grok 3 is good. It's still shit at pictures. DALL-E and ChatGPT are better for image generation for the moment, but on every single day there's huge upgrades with Grok 3. Now the crazy thing is Colossus, when Elon announced Colossus, it is the largest AI supercluster on the planet, and he got it up and running within sort of 115 days, which for most AI clusters of that size it would take 3 to 4 years. But they've been very secret until they released Grok 3 the other day. They've added another 100,000 H100s. Colossus is 200,000 H100 GPUs, which is just like, it's mind-boggling when you look at all the other AI clusters out there, like what OpenAI has, Microsoft, Google. Like Colossus is this huge thing, and they've used all of that to train and fine-tune Grok 3. So. As Elon was saying, is that when you're building a house, you can get a lot of the structure up and up pretty quickly. But what makes it a house is when you put the wallpaper and paint things and put all the furnishings in. So at the moment, Grok 3 is like a fully erected house with all the plumbing and everything, but they're now just doing the touching up. So over the next month or two, John. Sorry, I can't go through with embarrassing people. Yes, over the next few months, watch Grok upgrade itself on a daily basis. And Majorana, oh my God, has anyone followed this Microsoft development? This is just, like, I struggle to understand, but this is a huge leap in quantum computing. So, with quantum computing, I'm not even going to pretend I know anything about it. They measure the speed of a quantum computer in the amount of qubits that it can manage. So it took for the best part of 50 to 60 years to get a basic quantum computer that could do a couple of qubits, and then there we go. And I think up until now, the biggest one has been dozens of qubits. Microsoft have just created this brand new quantum chip. It fits in the palm of your hand, and they can fit millions of qubits on it. And the crazy thing is they've created a brand new state or form of state. So you have 4 forms of state. You have gas, liquid, solid, and plasma. They've now created another one, and this is where I don't get my head around. And they've basically created a new particle, a subatomic particle, where, no, I'm going to stop because I just don't know. But it's just nuts. They've created a new state and this new subatomic particle, which, yeah, it's just nuts. So it means it can do calculations where you could take every classical supercomputer on the planet, and it will do a calculation in 5 minutes, which every computer on the planet would take something like a septillion years, 1 septillion years or whatnot. So yeah, that's just nuts. And then RT ski. That is literally the best RT ski trip we've had in 7 years of RT ski. It was so fun. I just want to create an air of FOMO for everyone that didn't come. So next year is even better. Is Josh here? No? Okay. Yeah, he's newly single. I've never seen someone party so hard so often. It was like every morning he was coming in at like 4 in the morning. I'm like, man. Also, I've been trading for 20 odd years now, and I have never in my life seen a base of support as strong as this bench.
Come on, break! Break!
later on, we doubled the amount of people on that bench, and we were literally jumping on it, and it would not break. I mean, yeah, that was one hell of a base support level. It's a bit like Bitcoin 95K. And yeah, that day happened to be Lewis's 40th birthday, and this is the best picture of the whole trip. I love how it just hit his glasses, none in the mouth.
It looks like you're trying to mop up in the back as well.
Is Brad here yet? No? See, the RTC people, they're probably drunk, they're not here. They're all registered to be here. Right, let's go through some of the charts. You can see I'm trying to stall for time because we have way less content today. So, the other day, a friend, I don't know if Rory's here, seems like everyone I'm thinking about is not here today. So Rory, relatively new RT member, he was doing a photography gig at some event, and he kept sending me pictures of the slides, and it's interesting. So this person obviously had a similar sentiment as we do, and this was, I think he was saying something like the US is on a very bad path unless they cut spending, yada, yada, yada. And a lot of the slides kept talking about, a percentage of GDP. And whenever I see a chart that is a percentage of GDP, you have to sort of say into your mind, it's bollocks, okay? Anything as a percentage of GDP means jack shit. So, I love your shirt, by the way. Yes, I agree.
I thought it was appropriate.
Yes. So, for example, GDP is like talking about the GDP of your family. It's like taking the revenue or the salary of your mum, your dad, your brother, your sister, your auntie, your cousins, everyone in your whole clan, and going, that's our GDP. But it means jack shit because each one of you has your own income and outgoings. You have your own books to balance. And so when a country goes, our GDP is 30 trillion or 4 trillion or whatever, it means nothing. You have to look at the income and the outgoings of the federal or of the government expenditure. So usdebtclock.org is a great site. So if you go to the actual website, you'll see these numbers move in real time. Who's not seen this website before? A few of you. Just for the benefit of you guys, let's get rid of WhatsApp. US debt clock. So my screenshot is already out of date because I took it yesterday. You can see these numbers just go up and down depending on what it is. And so when you're looking at the US, people go, 36.5 trillion in debt, their GDP is somewhere around here. But really, the only two things you have to look at for a country is what is their revenue? So the US makes 5 trillion a year. What do they spend every year? 7 trillion. So they have a deficit of 2 trillion a year. So it's like you earning 50 grand a year, but you spend 70 grand a year, and you're in the hole for 20 grand a year. And you've been doing that for 70 odd years, which is why, and this is equivalent to having $36.5 million of debt, even though you've got an income of, 3.65 million debt. So,
who creates this and puts all the numbers into it?
So someone has just created a website and they've taken the sources, so each one you'll see the source. So I've hovered over here, it's taken the numbers from the US Treasury. And so every stat comes from somewhere different.
But I can't believe they're updating that data.
No, so what they
multiple times a second.
I think there are algorithms with each one. So they look at the cadence of the accretion over time. Then they go, okay, it's increasing by 100,000 a second. So it's not going to be, to the T, but it's a good rough rule of thumb. So, right, let's continue. And GDP is rubbish because Japan has showed us that having debt as a percentage of your GDP means nothing. They hit like 300% debt to GDP in the past. They're still fine. The UK right now, we are the worst country on the planet when it comes to external debt to GDP ratio, 300%, and we're pretty bad in terms of public debt. But it means nothing because the world prints. The world relies on credit and liquidity, and there's 350 trillion worth of liquidity, debt on the planet, or liquidity, let's say, and everything gets refied. So the world has to roll over roughly 50 to 70 trillion dollars worth of debt every single year. The US at the moment has a debt maturity wall coming. Well, it's hitting now actually. So roughly between 25 to 30% of US debt is rolling over this year, 2025. US debt right now is 36 trillion, 36.5 trillion and rising. So what's 25 to 30%, Daniel? You know, they've got roughly, what, $10 trillion worth of debt that they have to roll over this year. So this is why when you look at a press conference by Jerome Powell, you have to just ignore what he's saying. And one thing that's looked after me pretty well with my trading is I've got a rule of thumb of never listen to what the Fed chairman says during press conferences, because it's just political, it's towing the political line. It's they always do what they don't do. They always do what they say they won't do, typically. So every time I get my head under the books and look into all of these metrics, it always results into one thing. We're going to have to lower rates and print more currency, something which I've been saying constantly for about a year now, and we're slowly getting there. Sorry, someone gave me a BitTensor coin the other day, and it's been rattling around, so if you hear some rattling, it's that. So yeah, they've got roughly 10 trillion that they have to roll over and refi this year. If you're going to roll over $10 trillion worth of debt, let's say 9 to 10 trillion, you don't want rates to be higher, do you? You want them to be lower. So when you're rolling them over, you're paying a lower rate. Also, there's this thing called the reverse repo, which is, again, quite tricky to get your head around. But what happens is that, let's say I'm the Federal Reserve and all of you are institutions, your banks, hedge funds, big boys and girls. And what the reverse repo is a facility where you can lend cash to me overnight for a bit of a yield. So I'll give you some bonds, and you give me some cash just overnight, so it's less than 24 hours. And for that holding period of me holding your cash and you having my bonds, I'll give you a bit of a yield for that. So if there's not many places to deploy capital, what happens is that the reverse repo sucks up liquidity. So it's a liquidity sponge. It can either suck it up or not suck it up. So we had COVID and all the furloughs and every government was printing like nuts, and the globe printed what, $5 trillion like that in the space of a couple of months. So we had, they turned the printing press on, the taps on, and it flooded the world. But then everyone went into a phase of QT, quantitative tightening. But they're like, shit, what do? We've got all this capital just sloshing around everywhere. We need a sponge. So, and this is why the reverse repo facility, from the sort of March 2021, just sucked up all of this liquidity. It sucked up $2.4 trillion worth of liquidity. That was, a lot of it from the stuff that we spurted out in 2020. And so this is a way that they could use a reverse repo to do their QT initiative. But what's happening now is that the reverse repo has pretty much been drained. So although we are still technically in QT, or they're easing up on the quantitative tightening, they've been adding liquidity into the market via other mechanisms, i.e. that. The fact that roughly $2.2 trillion worth of liquidity has evaporated from the reverse repo means it has gone somewhere else. And it normally means it's gone to risk on assets, stocks, other bonds, commodities, or other countries. So this is why Japan is also very interesting, because it's basically the biggest liquidity lender on the planet, because Japan have been doing quantitative easing for what seems like forever. And so sometimes the reverse repo is out of the hands of the Federal Reserve, because if you lot think, wait a minute, yes, you can do the reverse repo overnight with the Federal Reserve here, but what if someone over there in another country is giving better rates. You're going to move your stuff over there, aren't you? Or if you can find a better yield elsewhere, you're not going to bother. So it is one of two things, or it could be both. But yeah, now this is basically depleted. There's no other way really that the US can do liquidity type stuff whilst having a quantitative tightening posture, if that makes sense. So by removing one of their tools, it means that, you know, as time progresses, they will be forced to lower rates and print more currency, despite what the news will try to get you to believe. The other big charts are still the same. So yeah, that's US rates, that is unemployment rate, and that is inflation. As I've said, probably 10 cuddles in a row now, all these charts align to a big crash. Now, trying to pinpoint when that crash is hard, and I'm going to be a cop-out and say any point over the next 15 months, let's say. It could happen tomorrow, it could happen early 2026. But all the big macrometric charts point to a big crash, like ASAP. Because it's once rates start cutting fast, that's normally when the crash happens. But I'm not worried, and you'll see why in a bit. When we look at the US PMI index, so the Purchasing Managers Index, this is the chart at the last cuddle, and I said that, you know, this is a very cyclical instrument. You can see it, you just see how it goes up and down over the years, and this chart goes back to all the way to 1986, not that long. It goes back further. But you can see it's cyclical, and I was saying that 2025 is the year that the PMI goes back up because of the global liquidity cycle, which is a 5.5-year cycle. Here's the chart now. Here we go. We're starting to go back up. And it just so happens that the crypto cycle is superimposed on the US PMI and also the global liquidity cycle. So that's bullish for crypto, very bullish. This is a not so bullish chart. This is the spread between the 10-year and the 2-year. We've been following this for a long time, as you know, and I've always said, once we V-reverse back into this sort of red pain band, this is where shit falls over, and we start seeing a crash. So again, we're now dancing, or that was what it was last cuddle, this is what it is right now. So yeah, we're dancing around in that little hole of pain. So yeah, but I'm not worried about a crash. I'm not at all. I think what will happen, let's say it happens tomorrow, yes, all of our crypto will be nuked temporarily. So the key thing to do is to not exit your whole position on a spike low, on a big red devil candle. So when this happens, you just have to ride through it. Just be Noah in your Bitcoin arc or your Tau arc and just sit through it, because this chart isn't that compelling, but what we are seeing is that the crash epochs are compressing. So the amount of time it goes from crash back to previous highs is getting shorter and shorter. Now, I haven't put every single crash that I could find, but this is the S&P 500 going back to, again, my laptop's too small, 1871. And this is a 6th monthly chart, so it's quite long. But on the right-hand side are the days it took. So on the far left one, I can't even, it's something like 9,000 days for it to get back to previous highs. And then we had 6,755 days from all-time high back to recovering from that crash. Then we had the Great Depression in 1927. That took, again, 9,000 something days. Then in the 70s, 2,700 days, 551 days. We had a big one in the tech bubble crash. This is the only one of the spurious points, because the tech bubble crash, it took 2,500 days to get back to previous highs. And then, as you can see, crashes are getting more and more compressed. Now, that's all fine, but really, I should have drawn a big line around the 1990s. 1998. That was when long-term capital management blew up, which was the biggest hedge fund on the planet. And ever since that event, global finance has been woven. So everyone affects everyone else now. And it's really since 1998 where we entered this new form of economics. So Keynesian economics, which is what every economics teacher or professor has taught or learned at uni, they are learning a defunct form of economics. Which is why, you know, every economist on the planet looked at Milei in Argentina several years ago when his plans will do nothing. Every economist was wrong because Argentina's not thriving yet, but they're on the up, ignoring Libra. So these days, because of the way that the global liquidity cycle works, crashes, as in the epoch, the time for a crash to basically recover is getting shorter and shorter and shorter. So when we have this crash, if it catches us off guard, just ride it out. That's what I'm going to be doing. But in an ideal, you know, praise Elon or whoever is out there, we hope it's in 2026, and crypto would have already peaked by then. I'm just hoping that we have a nice peak, you know, Q4 this year, and then we can crash in 2026 for all I care. So this is one of my fractal chart, which I've been following for years. I think this chart is going to become defunct pretty soon, like by the end of the year for sure. So for a long time I said that 200k Bitcoin is where we should peak out with Bitcoin this cycle. I retract that now. It's going to be a lot higher. And also I don't believe we're going to have another cycle of, you know, big crash and then another yellow phase back into the halving. I think we're going to have a bifurcation of crypto where ETF crypto just carries on going up, whereas non-ETF crypto goes through the full, you know, 90% crash. So I think Bitcoin will just go up indefinitely now, and also Ether. It's interesting that, you know, hey, there's Josh. What time did you go to bed last night? Pass.
5.
What did I say? Grab a seat, mate. We were talking about you earlier, that's why.
Your suspicion was correct.
See, point proven. I forgot what I was going to say. Crypto, that's what I was going to say. Yeah, so I think Bitcoin's just going to go up indefinitely. Just the supply squeeze is just going to be incredible. We have states slowly, or about to be adopting a strategic Bitcoin reserve. And, you know, I think I wouldn't be surprised if some countries try and beat US to the punch. So it's obvious, if you look at game theory and you are a sovereign state, the GTO move here, so game theory optimal move here, is to adopt a Bitcoin reserve before the US does. Basically, the country who can adopt 10 to 20% of the entire Bitcoin supply wins in the future. So I think 1 million Bitcoin over the next 5 years as part of the US SBR, I don't think it's enough. It'll help the US big time, but, you know, the world shifts from different types of power. Michael Saylor was saying how, you know, back in the old days it used to be naval power. He who had the biggest navy was the global superpower. Then it became, you know, air power, nuclear power, and now we've got sort of cyberspace power. No one is basically dominating the cyberspace world, and the capital within the cyberspace world is Bitcoin.
Hasn't Russia already beaten America?
Well, we don't know officially. I've got an inkling that Russia is one of the world's biggest Bitcoin holders and one of the biggest hash rate providers, but there's no concrete proof yet. But I think this year or maybe next year will be one of the years where China or Russia comes out and goes, hey, we've got 2 million Bitcoin, forgot to tell you. So there will be a stampede. And this is why I think Bitcoin, maybe Ethereum, will just keep going up indefinitely. But every other alt will still go through its 90% crashes.
Could you say the same about other countries that have had sanctions
Yeah.
imposed, that they've all been doing this? Like
Yeah.
Iran and places like
Anyone that,
Korea.
yeah, anyone that has been sanctioned, or they've been forced into bartering, effectively. Yeah. So, I mean, if I was Iran or North Korea or whatever, you know, I would be fleeing into crypto. North Korea did the $1.5 billion hack last night on Bybit. You know,
0.5% of all of the Ethereum supply.
yeah. I wouldn't be surprised if they just go, right, yoink, that's now part of our strategic reserve. We started with Ethereum, now we're going to hack some Bitcoin exchange. Like, if you're in North Korea and you've got one of the best hacking groups on the planet, and you don't really give a shit about any other country, you just, right, I'd go, right group, hack as many Bitcoin places as you can, gobble it up as much as possible. Again, it's all about game theory, and the GTO move here, if you're a country right now, is to gobble up as much Bitcoin as you can before it's too late. And the US, if you take the US, they don't even need more money. They don't even need to print more money to gobble up millions of Bitcoin. They can just rebalance their portfolio. Every country has a strategic gold reserve, strategic oil reserve, strategic gas reserve. They can simply just sell off chunks of their other strategic reserves and flop it over into Bitcoin. But unfortunately, politics will politic, and the strategic Bitcoin reserve in the US will take months and months and months. So it will be probably Q3 by the time they get going. Could be too late. And then this is my favorite chart in the whole world. This is total crypto market cap. I've always had a cop out that total crypto market cap will be in that green hole towards the end of the year. But that green hole is $6 to $16 trillion. It's a massive cop out. But I believe it's going to be something like $11.67 trillion, something. It's never a round number. It's always a little bit below a round number. So yeah, I think something like 11.7 trillion, something like that.
In 7 months?
Like Q4 is typically what I say. So I've always done this by 1st of December. So yeah, I still genuinely believe we will see multiple trillions flowing into crypto this year, by December this year. I'm so insanely bullish. So if you hear me say anything bearish at all today, please bear in mind that my bearishness is that much and my bullishness is that much. So when looking at what Bitcoin may be, for years I've said roughly 200K. I think there's way more chance it could shoot way north of that. But if I was to try and be as precise as possible, I'd turn my gaze onto the Bitcoin market share chart. So I'm going to have to sort of retract this thing here. I originally, again, years ago, I said that with the amount of new crypto being out there, there's just more crypto gobbling up little chunks of the Bitcoin or the crypto market share. And so Bitcoin will probably be down here. I'm scrapping that. I think it's going to be more like here, which means Bitcoin is probably going to reach, when the alt market starts rallying, it's most likely going to get back down to here, which is 42 to 45%. So let's say Bitcoin during the heavy alt market drops to 43% of the entire market. So assuming $11.7 trillion market cap this year, and Bitcoin's 43% of that, that's just over $5 trillion market cap just for Bitcoin. So divide that by the circulating supply of Bitcoin and this is the Bitcoin circulating supply on the 1st of December this year. So 19.96 million, that gives us 251. So here's my cop out. I think Bitcoin will be 250K plus or minus 100K. But there's much more chance of it being, north of 200. Also, I just thought of something. I'm looking at that 5 trillion number, and I've thought of a metric that I haven't thought of before. So, with anything exponential, you can't look at a linear chart because it just goes up to the moon. So the only way you can accurately gauge exponents is looking at the doubling cadence. So you all heard me talk about the Human Genome Project, how it took them, started in the year 2000, I believe, this is off the top of my head, started in the year 2000. After 7 years, they had only mapped 1% of the human genome. And everyone said, oh, it's going to be like 700 years before we map the whole genome. But then Ray Kurzweil came along and went, no, we'll map 100% by 2013. Everyone laughed at him, like with most of his predictions, which have all come true, by the way, pretty much. And he's a big proponent that to look at exponents, you have to look at the doubling cadence from the first double all the way upwards. So the reason he knew that it would only take another 6 years to go from 1% of the genome to 100% is because he was measuring the doubling cadence. So go from 0.00001 to double that. So I'm now looking at Bitcoin being potentially $5 trillion pretty soon. And I remember looking at Bitcoin when it was like $8 billion market cap. And I'm just thinking, when I get home late, or in fact probably during lunchtime, I'd like to map out the doubling cadence of Bitcoin in market cap, not price, the market cap. Because it's already a $2 trillion market cap right now. And that's gone up pretty damn fast. So yeah, sorry, if I forget that, I'm just gonna write this down because I've got the memory of a goldfish. Doubling cadence. Cool.
Is that number of Bitcoin the official number? You haven't minus the ones that have been lost?
Correct, yeah. That's the biggest number, yeah. Exactly. Because there's really only about 8 to 9 million Bitcoin actually floating out there, up for grabs. Which is why, going back to the game theory optimal move for a country, you need to move sooner than later because there's actually not that much crypto to be had. Also, going back to the hack last night, so for those not familiar, last night Bybit was hacked by North Korea, basically. Sorry? Oh.
Just naming the Lazarus here.
Yes, yeah, the Lazarus group. And so, I completely forgot what I was about to say there. Damn it, forgot. Sorry. I'm not used to being up at this early in the morning. It takes me, I'm a great afternoon person, I'm a rubbish morning person. Bugger, I'll remember later. Anyway, global liquidity still going up. And then, yeah, we're slowly getting out of quantitative tightening. I don't have an updated chart. This is an old chart from the last CUDL, but from looking, because I do follow Cross-Border Capital, they're a very good analytics firm for liquidity. That's all they do, just liquidity and analysis. This is an updated chart. Again, we are halfway up this curve here. You know, early on this year it was down here, but there is a lag. So we should get up to sort of these areas soonish, and then the lag for risk-on assets will catch up. But other than that, same. The big charts don't really move that much. And also the Federal Reserve are very sluggish in updating some of the metrics. But long story short, debt will always outpace GDP and earnings. Debt will always outpace M2 now. It's just maths. GDP is going up, but that's a bullshit figure, as in it means nothing. US debt will always be more than US GDP. Well, unless Doge does something about this. And the deficit, as we've seen, you know, they make 5 trillion a year, they spend 7. As a percentage of GDP, who cares? Doesn't matter. Again, doesn't matter. It all comes back to the smooth brain bullet points. It's as simple as that. And so far I've been correct with this. And I'd like to say in a year's time, I'll be like, I freaking told you for 2 years, this is the game plan, folks. the only thing I'm not sure of is when this crash will happen. Is the crash going to happen here? This is where we are now, right? We're sort of halfway through rate cuts. Is a crash going to happen here, and that is the trigger for crazy stimulus? I don't know. Or is it going to happen afterwards? Either way, I don't really care. The US has to roll over 10 trillion or 9 or 10 trillion dollars worth of debt this year. There's only one way they can do that. Lower rates, print more money or currency. Are we? Or the RT ski people are the ones that are arriving late. I saw this article last night. And basically what it shows is that in December, lots of big countries were dumping US treasuries. So China unloaded $9.6 billion in treasuries, but not just China. Japan, $27.3 billion. And this is not new news, because we all know already that countries are not buying as much debt, US debt now. But what pressure does this have on US interest rates? If everyone is, so remember, you have to think of the Federal Reserve as having a lemonade stand. And the only person that's buying the US lemonade is their mother, or the Federal Reserve. So they keep buying US debt to try and make everyone look, give the impression that everyone's buying US debt. But there are other countries buying the lemonade. But if other countries stop buying your lemonade, what are you going to do? You're going to have to buy up more of your own lemonade, which means you have to print, which means we have to move into a quantitative pumpage mode pretty soon, because countries left, right, and centre are just dropping US debt. So, yeah, I thought long and hard, because there seems to be a mini wave of, or like an echo chamber in Twitter at the moment, of people going, oh, US rates are going to stay high, and they're not going to print this year, and it's total poppycock. And I've tried every way to think about, okay, let's say I'm wrong. How could they be right? What mechanisms could make the US or the world not go full liquidity this year? And I don't see any way possible. And it reminded me, so I was going back to, I've been looking at the US debt clock quite a lot recently. And it reminded me of this video, which I bring up every now and then. I made this 4 years ago. This was when we were locked down. And it was what I would do if I was the dictator of the UK. And guess what? Every single thing I've done in that video, Milei and Bukele, so El Salvador and Argentina, have copied this video almost word for word. I'm not saying they've watched my video, I'm just saying it just seems as though they have watched my YouTube video and copied every single thing I said in it. And what I was doing is I was breaking down the US finances and going, look, UK finance. I was like, shit, in 2020, we've got an income of 660 billion, but we're spending almost £1 trillion. Well, it doesn't take someone smart to realize you're going to go bust if you do this forever. Like, if you had a 16-year-old child or 18-year-old kid who was earning £660 a month, but was spending £1,000 a month, you'd slap him or her silly, wouldn't you? Say, you're an idiot. Sort your life out. Well, politicians pontificate and say, oh, we should be more fiscally responsible, yet they can't even balance a budget. So yeah, I was saying exit all lockdown stuff, yada yada yada, and how that we could save a whole bunch of stuff. Well, guess what Doge is doing in America right now? Pretty much, I think Elon watched my video as well. And I think looking at all of these numbers, the US is in such a great position to just do a full 180 here, because the US makes $5 trillion a year. If Elon can cut that $2 trillion and be very aggressive, and he's very good at cutting waste. I mean, he went into Twitter and fired like 80% of the staff, and it's now making more money, it's more profitable, it's more efficient, way more features. And he's done with that with every other company he's ever done. He's done it with Tesla several times, SpaceX many times. So I reckon he can do that 2 trillion savings. Well, this is like normal business mergers and acquisitions here. This is what I used to do a lot. I used to go in distressed businesses and go, well, you're fucked. We just need to cut this and this and this, and then balance the budget. It's not hard, folks. So that's where they are right now. Well, you take 2 trillion off that, you're scratch. You then add income a little bit more, let's say even 500 billion, then all of a sudden you have a $5 billion per year surplus. It's not hard. And when you see what Trump is doing with the commerce aspect of the US right now, it's all about growth. He's just basically giving the green light for any form of growth, whether it's building new factories. So it doesn't take much. Even if you just cut the outgoings by 2 trillion, you're at least scratch. But this is why I think they can do a sovereign wealth fund. And by the way, the media, of course, has poo-pooed all over the sovereign wealth fund, going, how can you possibly do that? You're running a deficit every year. Well, this is how. You let Doge do its thing and then just boost yearly income by, I don't know, even if it's 100 billion, that's still a lot. It's more than every other country. Just, yeah. Seems simple, but it's going to be brutal. And like with doing any distressed mergers and acquisitions, it is brutal, to be honest. Like one of the things I used to do is I'd buy companies out of administration. So the company's already bugged up, it's being liquidated. So I'd go to the receiver or the liquidator and say, hey, I'd like to jump in, I'd like to buy up all the assets, or and I'd create basically a new LTD. I'd buy up all of the assets of that buggered company, and then basically give it another go and try and save staff. And one of the things is when or even if I didn't do that sort of knuckle LTD and I actually went into the gangrenous entity, one of the things you always have to do is do a payment holiday. So you basically go, hey, so every company will have a load of direct debits, loads of outgoings, loads of suppliers, all that sort of stuff. So you go in with the receiver or the liquidator and go, hey, you contact all the creditors and go, hey, this company's going bust, so you're going to get 0, but I'm coming in now, and what we're going to do is do a bit of a payment holiday, because I don't want the company to go bust, and I don't want to lose you as a supplier or whatever. So we're just going to pause all outgoings for the next 3 months, whilst we figure out what we can cut, what we don't cut, yada, yada, yada. Please work with me. And so I'd buy myself like 3 months breathing space, whilst I figure out what can be cut. And that's exactly what Doge is doing right now. They are doing effectively that payment holiday where they're just cancelling everything, which is again what I used to do, and then very quickly you'll realise, oh shit, I shouldn't have cancelled that, because things that you cancel which you can't cancel, they rear up as an ugly problem very freaking quickly. So you go, okay, let's do that again. Okay, you're back on. So that's one way of figuring out what we can do. In fact, Santander booted me out as a business customer last month, and that's actually quite a fun, not a fun exercise for Lewis, but I was quite curious as to how many subscriptions and direct debits that would automatically fail that were like, oh, we didn't need it. I don't actually have the numbers. Did we save much money per month from? Okay. Fair enough. Well, it shows you're running a lean and efficient business, Lewis. Well done. Yes, mate.
I refrained from getting into an argument with some idiot on LinkedIn the other day about, he was basically saying that splash stripping out government spending obviously killing GDP at the same time. And I was like, well, what percent is a bad idea then? And then, but in the interest of always being prepared to be wrong, like, what's the potential downside of wiping loads of government spending off? What's the fallout from it?
No, it's a good question. So the immediate fallout, which or what the media tends to say is, like let's take the deep state piggy bank, USAID, right? So it's not aid, it's agency, US agency intervention department. Sorry?
International development.
International development, that's it. So a lot of people are saying, oh, look, they're just cutting all of these contracts. There's some people that need those, the contract could have been for, DEI training courses in Bangladesh, which I think was one of them. So there could be some poor, confused people in Bangladesh that are not getting their DEI training. Sorry, that's a bad example. But yeah, so some were saying that, you know, there could be some things cut which are actually doing good in the world. But I think it's better just to cut everything and then see, you know, and get into a better financial position and then actually go and do more good. Because even if there are good causes in place, the money's not even getting there. I mean, we've just found out, like, was it yesterday, that one of the Ukrainian ministers stole $47 million of US aid and went and bought a whole bunch of French villas and land in France. 47 million. And I remember, hell, in the Air Force, I was a truck driver in the Air Force. I was flying Hercules towards the end of my career, but I was flying Hercs when the Haiti. Do you remember Haiti? I think it was 2010. I flew stuff over to Haiti. So we all of a sudden, you know, we were on alert, and then we had all like shitload of Hercules just rammed full of pallets, or, you know, water, food, blankets, all that sort of stuff. And I was like, sweet, I've never been to Haiti before. Let's fuck off to Haiti. We land there, and the whole airport is just full of pallets. So what was happening is that for some reason there was road issues, and they couldn't get any of the aid or the pallets from the airport to where it needed to be. They're saying, oh, the roads are bust or whatever. But there were stupid clauses in place that if the aid wasn't being used within a certain period of time, it'd be returned to sender. Guess how much stuff got returned to sender? Like most of it. So I'd be flying over there with a whole cargo full of shit, flying back with half of it. I'm like, I think this water needs to stay in Haiti. I don't think the UK needs it. So, and I've seen this firsthand. And so times that by every other aid project you can think of. So I don't have a direct or good answer to that.
Just like, well, it contributes to GDP, so it's going to remove, the deficit's not going to get any better because you're going to reduce GDP by the equal amounts of.
There's things that actually get rid of excess product as well, and the soft power. Like the UK, post empire, they converted a lot of that office into the equivalent of USA. They exhibited their soft power that way. The French massively, they've just been kicked out of France after making essentially parts of Africa speak French, use a franc. So all these things are kind of soft powers, and my worry is the only other game in town is China. Once the West shrinks, China comes in even more, and we'll never go back in again.
I think that tide is unstoppable anyway.
Is it?
I believe so. I think, you know, yes.
Well, whether it is,
yeah.
That's like a retreat from Western alliances and Ukraine by the US.
Yeah.
These are real record scratches, not planned out at all. So cancelling approved budgets for things a year ahead and just scratching the whole record across, that's destructive. It didn't need to be that way. They could have said, we're going to go for everything and don't hold any piece of crap that we cut. That's not, Doge is now always going to be associated with catastrophic destruction of the federal state. Whether you like the idea or not, whether it makes you cheer, or whether it makes you whatever, it will be associated with that. And all of the destruction they will have to repair. So it sounds to me like a clever person's way of doing it.
Okay.
Fucking it all over and seeing what happens.
Again, we'll have to agree to disagree on that one, but...
Can I just add? So
yeah.
Obviously, with all the Doge cuts, the fact they've got an implication on GDP. Will that not just fast forward us to smooth labour upwards?
Fast forward what, sorry?
Fast forward the situation to your smooth labour upwards and tear on the printers.
Maybe.
GDP reduces as a result.
Yeah, maybe. So again, we just need to ignore the GDP stuff. The GDP is literally the economic output of all entities within, let's say, a country. But at the end of the day, all that really matters is the US government's income and outgoings. The GDP is relevant to this. So Doge and all that is just focused on that equation alone.
Yeah, but remember GDP equals printed money. It's what basically.
Yeah, they'll have to print. Yeah, it means lower GDP or lowering GDP tends to mean the stock market is also going down typically, and then yeah, it could exacerbate the smooth brain bullet points, and they print faster. Yeah, maybe. Yeah, so that's the big macro picture.